I told you Jim Lebenthal has a move. So repeatedly, love this stock. I mean, people are going to Vegas or Macau, wherever the heck they need to go to gamble at Wynn. And the stock's finally turned around after being a little bit of an underperformer. Now all's well, and now you trim it.
I swear, I have to tape this episode and like send it out as a Christmas card. This is a good trim, Scott. This is a good trim. The stock's up 70% in a year. It's up 40% over the last 3 months. If you want to buy low, you have to sell high. I'm trimming it here. Specifically, though, I'm starting to see the 2027 estimates start to go higher meaningfully. And what that tells me is that what I've been saying for quite some time, that the Dubai new resort, the Al Marjan resort, is now finally starting to be priced into estimates. I've done, in my defense, Your Honor, I've done a very good job of staying out of the way of this thing. Okay, well,
just kidding.
I've done a good job of staying out of the way of this. It's up 16% in a month, for crying out loud. Finally, it started to show some weakness today, and I just decided to trim it, actually cutting it about in half.
Oh, wow, okay.
Yeah, so I am retaining a position. I know you hate it, Your Honor. When I do that, I'm selling it, but I still hold it. But look, the sale is what it is. I'd love it if we get a pullback and I add that right back into it. I do still think it's a good stock for the long run, but I think in terms of share price, it's ahead of itself right here.
You know it's about to start, like soon.
Yes, right? I do. Mm-hmm. I think this might be priced in. Go ahead. You want me to steal your thunder?
NFL priced in?
I think it might be.
I mean, this is.
By the way,
this is the biggest. This is the biggest season.
Yes,
Contessa Brewer's going to be with us right now. Hold on. I'll let you talk on the other side. Okay. I promise. Contessa is going to tell us that it's the biggest betting season ever, or it is the biggest time of year for betting.
I mean, depending on where you're betting. I don't know if we're going to talk about Macau right here or whether you want to talk about football.
There are football fans all over the world. Maybe they're going to go to the sports books in Macau, too. I don't know.
Listen, international expansion for the NFL is a real thing, Scott. But for U.S. sports books here, this is the biggest season to win new customers, to grow the pot of wagers. And what we're hearing is that Americans will bet $30 billion this NFL season. That's according to the American Gaming Association. The lion's share of that money is going to go to FanDuel, which is owned by Flutter and DraftKings. They dominate this space. Both are seeing their shares double-digit gains in the stock price this year. But look, they're facing growing competition from BetMGM, jointly owned by MGM and Entain, and by Caesars. The biggest threats still offshore unlicensed sports books. Those are big competition, raking in an estimated $400 billion. $30 billion on legal sports books, $400 billion for offshore sports books. 50 attorneys general wrote a letter to the Justice Department earlier this month. They said, look, the federal government really needs to crack down here on unlicensed gambling because the states are losing money, an estimated $4 billion in tax revenue. And GeoComply looked at the numbers at states that are seeing aggressive enforcement. And what they saw is when states enforce the action against legal sports books, on average, licensed sports books see a 10% active player spike year on year and 39% more new account signups. So it really matters to enforce the law, not only to the companies, but to anybody who's invested in those companies as well.
As the expert witness in my courtroom today.
Yes, Your Honor.
What do you think of Jim looking at the appreciation in the stock, which you obviously cover closer than anybody?
Yeah.
And you don't have to opine necessarily on his taking profits in it, but just the fact of what the stock has done.
It's a huge run up. I mean, to be hovering where it is now around $126, $127, it looks good, especially when you draw it past that era where Steve Wynn had to resign. But then what happened, Scott, is I went out, say, 20 years when Macau was coming online and the big growth there. And you know what you see? Over 20 years, it's basically flat. And so my take on it is maybe Jim is onto something. It's a stock that maybe it's not a hold for the whole life kind of thing, but you get in, you take your profits where you can, you get out, then you get back in when there's a dip because it's a very volatile stock. The whole sector sort of runs like this.
Contessa, thank you very much. Contessa Brewer. So, I mean, I guess the only question is, like, after such a prolonged period of flatness, so to speak, whether it is starting a new trend higher.
You know, it's actually
has nothing to do with whether you trimmed it or didn't trim it. Just the idea of you're obviously content with living with the fact that, hey, if it continues to go up,
I am
cool
content.
with that.
And part of this is actually the 3-year annualized return, annualized is 30%. So it's actually not just the last year or the last 6 months. I mean, it's had a good run here, and I keep saying that it's pricing in a lot of good news. I do think Contessa hit the nail on the head, that it's trading at a stock price that it first hit in 2007. So, you know, a little bit of history here does have some bearance. I know sometimes I say,
don't even go there, because I know what you always say, and I was ready right when you were going to say it. I was ready when you were going to say it, because you're not going to do that. You're not going to. You have made the point. Past performance has no influence on what I think when I'm thinking about selling a stock.
It's like Jack Nicholson in A Few Good Men. I mean, you're that good. Okay. Look, it's...
You can't handle the truth? Should I just throw it all out?
No, look, I knew as I was saying that I was gonna get my just rewards on it. But look, it's trading at 24 times forward earnings. It's a little pricey. It's had a heck of a run up. I think I'm going to be able to buy this back on the cheap.
Okay.
And I still have some shares.
All right.